Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is creating a bullish pattern and testing very strong monthly demand and support. In fact, from here, all this previous move to the upside was created. Again, here, the market tested its zone and rejected it to the upside. Now, the market is testing the exact same zone, has already started rejecting it to the upside. So in a situation like this, we could expect more potential bullish continuation to be created away from this area. So the monthly time frame definitely seems quite bullish. We can also notice that from a pattern standpoint, clearly this is an inverted head and shoulders with an impulse and correction. And when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can see is that we have a perfect 0.618 Fibonacci retracement here, the red line that is lining up perfectly with this previous resistance turn support, creating a confluence of support in this area that the market has already started rejecting to the upside. And when you see confluence of support, that increases the probabilities of seeing institutional longing. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders and see how hedge funds are moving their orders. For now, let's drop down on the weekly time frame and see what we have. Now, from a weekly perspective, the situation is a bit different because clearly at the moment the market is testing structure resistance. This zone was in fact acting as previous support here, preceding all these rejections to the upside. Then the market broke below that zone. So all that previous support was turned resistance here. And since we're testing resistance, there is the possibility first to see some short-term bearish price action and then the continuation to the upside. So clearly, here in the weekly, we are testing resistance and there is definitely the possibility to see a reaction to this resistance. Let's keep that in mind and move down on the daily time frame. Now, from a daily perspective, we can see how clearly everything comes into play because we have a pattern which the usual completion of this pattern is exactly what we would like to see by looking at the monthly and weekly time frames. In fact, we can see how we have here this overextended W formation. Now, after the creation of a W formation, what you would expect is first a correction and then the continuation to the upside, which, if you remember, is exactly what we have just seen. Because on the monthly time frame, in the long run, we would like to see a push higher. However, in the short run, we would like to see a reaction to this resistance. So that aligns perfectly because here on the daily time frame, if we get first the completion of this W formation and then the continuation to the upside, which is how usually this pattern plays out, we would have exactly what we wanted to see by looking at the monthly and weekly time frames. So let's keep this in mind. And before we move more into detail on what we have here on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players are doing. Now, if we check the data for the euro, immediately we have to remember that if we're looking at the euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see is that in the long run, clearly EURUSD has been getting weaker, going from 152.3k all the way down to minus 9.9k net positions. Now, just now, net positions started slightly getting increased, which could be the sign that institutions once again are starting to long EURUSD. And in the long run, it will continue to get more bullish, as you would expect by looking at the monthly time frame, since we have just analyzed it. However, EURUSD is still quite weak, because net positions decrease like this means that institutions went from having more longs than shorts with 235k longs and only 83k shorts, all the way down to now having the opposite situation. So more shorts than longs with 173k shorts compared to only 167k longs. So this means that as EURUSD is still weak, there is definitely the possibility to see the potential push lower, completing this W formation, and only at that point to see the continuation to the upside. But there is definitely the possibility, since EURUSD is still weak and institutions still shorted it a lot in the long run, there is definitely still the possibility of seeing this short-term push to the downside, completing this W formation. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point, I definitely wouldn't be surprised if we get a potential push lower, completing this W formation. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked directly in the description of this video. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program. As soon as you open the website and scroll down, you will see that there is a complete video presentation of exactly what is included, which is essentially everything. In fact, you have the possibility to gain access to all my courses, so risk management course, day trading course, swing trading course, MQL4 programming course on automated trading. Also, you have the possibility to gain access here to all my softwares, starting from the COT data software, which is the one that we have used in this video. Also, the trading station software with Telegram signals integration, which essentially puts together everything that you need as a trader all in one interface. You can also gain one-on-one private mentoring directly with me. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility directly from the website to apply and start your journey to enter this incredible program. So I really suggest that at least you go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.